All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So real quick, if everybody can hear me loud and clear, do me a huge favor, drop me a 1 in the chat, and we can get this session on its way for today. All right, Beneath, good morning. I see you here with me. All right. We are all set and ready to go. So let me jump out of here and go over to the Forex Factor to see what we have going on for today. So today, Thursday, 8:30 a.m. Eastern Standard Time, we've got the unemployment claims for the United States to projected as 221. Let's see what happens, right? See if we come in over under for U.S. employment claims. And then today, pretty light. Let's go back to yesterday. For the 15th, we've got the PPI that came in for the United States, came in flat. The projected was 0.3%, came in at 0. Core retail sales came in at 0.1%, so the U.S. consumer is still hanging in there. Empire Manufacturing Index came in at 9.1. It was negative 3.3, right? So for those of you who don't know what that is, it's the leading indicator of economic health. Businesses react quickly to market conditions and changes in their sentiment. It can be an early signal of future economic activity, such as spending, hiring, and investment. So it's a survey of about 200 manufacturers in New York State, which adds respondents to rate the relative level of general business conditions, right? So good economic indicator came in at 9.1. PPI came in at 0.5%, and then the retail sales, right, again, 0.1%. U.S. crude inventories came in at 3.6 million barrels, right? So it's projected 2.5, came in, right, at 3.6. So came in over the forecast. So take a look at oil, look at the impact there. And then Australia, the employment change, look at that, came in at 55,000. The projected was 22.8. Unemployment rate stays steady at 3.7%, right? So we come in here and we take a look at the employment change. What is it? Why is it important? It's a vital economic data released shortly after the month's end. The combination of importance and earliness makes it a hefty, makes for hefty market impacts. Job creation is an important leading indicator of consumer spending, right? So if people have jobs and jobs are being created, people spend, right? So it's very, very good. So you can see here actual is actual greater than forecast is good for the currency, right? So we'll see how that's coming along for Australia. But again, right, moving into today, pretty slow, right? We've got FOMC member Waller speaking. Okay, we know the back and forth with the Fed. A lot of people think they are done with rate hikes for this year, but we'll continue to watch the data as we head through this last half of November and into December. We had Lagarde speaking. She spoke at 6:30, so we'll check to see what's going on there. I'm not sure what she's speaking about. We've got FOMC member Barr speaking at 7:10, right? So these are not highlighted as red folders. So, and we've got Cook speaking. So we'll have to figure out what that is today, but nothing highlighted as red, so it must be on some other topic. Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. How about yourself?
Doing pretty good, man. Pretty mild day on the
Yeah.
fundamental front. Yeah, pretty mild day. Anything out there that you may have heard about or read about overnight?
No, nothing caught my eye. I gotta catch up on the speakers, but um nothing major outside of what you just covered.
Okay. Yeah, so slowing down a little bit as we head into Thanksgiving break here. So we'll continue to keep an eye on things. All right. So over to trading economics, China new home prices fall for a fourth month, right? We know they've had their real estate challenges over there in China. So we've got a decline for a fourth straight month. So we'll keep an eye on that. Real estate is important to any economy, right? So it's an important fundamental indicator in regards to growth and the overall health of a nation's economy. So fourth month, prices fall in China. Japan exports remains near record high, right? Record high. I guess that makes sense, right? You get your most bang for your buck with that weak yen. So exports are good in Japan, and then we got oil declines on the large U.S. bill. That's what we saw with those inventories, right? So a lot of more supply than expected coming in. So if we go back to yesterday and we take a look at the inventories that came in at 3.6 million, and projected was 2.5. So that's what you're seeing here in this article in Trading Economics. All right. Any questions on the fundamentals? Light, actually. Nope. We're good. Okay. Let's move over. Take a look at the text. Take a look at the DXY, right? We know that the dollar coming off the inflation data has been bearish, so it's been a bearish week so far, but we do have some pullback based on some of that data that we went over fundamentally. So you can see where we are. If we look at the daily chart, so we're correcting, right? The dollar is correcting when you look at it from a fib perspective and an ABCD swing. But if you just take it off, take off the fib, you can see, look, huge went off that data, right? Inflation data. Why? Because it's like, oh, inflation is cooling more than expected. So what'll happen with the Fed decisions? Well, the Fed most likely will hold rates, and it's probably, leading to investors thinking, right? Feds may be done with the rate hikes for the year. Okay, so a continued pause in the rate hikes, right? Because we know they have another meeting in December. Okay, so this is what you get. Right? Big, huge red bearish candlestick. Now we've got some pullback. We know that anytime you get a huge, especially like a bearish engulfing candlestick or a bullish engulfing candlestick, price is going to try to test it, right? A lot of times, at least 50% before continuing to the downtrend. So we can see we've got some kickback from some of the data that was released yesterday. But overall, this is making right now lower lows and lower highs, right? Okay. For the dollar, right? So there's a lower high, here's a lower low, here's a lower high, and here's a lower low. Okay. So the dollar is correcting. Okay. Any questions on the DXY?
No.
Hey, is that Jeremy that I'm hearing?
Yes, Benny.
Yeah. Good morning, sir.
Morning, how are you?
Doing pretty good, man. Doing pretty good on a Thursday.
That's good.
Yeah, appreciate you. You doing good?
Yes, I'm good.
Awesome. Awesome. All right, that's good to hear. Hope all the rest of you are doing well. So let's jump into the charts, right? Let's go right to the top with our Aussie pairs. Let's take a look at this Aussie yen. And take a look at it. We've got it in a couple different zones, right? So recently, okay, here it is at 80-20 on this 1 hour, and we're sitting here with a pullback. Okay, so this is a potential, right? So this is our 80-20 zone. Okay. So let me ask this question, right? Everybody is clear, right? And what we're looking for this 80-20 play. Yes, no? Or just drop me a 1 in the chat. Are we clear on exactly what we're looking for these 80-20 correction plays? See some ones coming in. Okay.
Yeah.
Reese. Okay. All right. We got some let me see. Okay. All right. So this is already 20 play, right? It's in the zone, right? We've got less than the 382 pullback off the B boundary, right? So see, it's less than that 382, right? And we pushed up and we broke this B boundary. And now we've moved up into the zone, okay? So we're looking for a correction from here. This is our 382 level, fib level, okay? Price to come down off this B boundary, hit this 382. Okay? Didn't do it right away. It pushed up, broke the B boundary. Okay, this is our B boundary. Yeah. Okay. Pushed up when we broke it. Oftentimes, price is going to stall and then make a correction back down. Okay. So this is a good potential setup for us. Why? Because we hit that 80-20 zone, price stalled, it pushed down, and now we've got a secondary opportunity with a pullback on the Aussie yen, right? So from where we are now, we're looking at close to 90 pips if we can make our way down to that 382. All right. So we could do his dance, right? Move all around. Okay. As long as it doesn't take out our high and push towards that stop, it's still in play. Okay. Some of you may run it a little bit tighter. Some of you may have your stop right over the high, playing trend line breaks or whatever. However you do it, right? This play is still active. Any questions on the Aussie yen? We're looking forward to make a move to the downside. That's the idea.
No, sir.
So we're good. All right. Okay. All right. So let's keep it moving. Checking in on this Aussie NZD, which we have been looking at for quite some time. Just want to review it because it is still an active trade because we haven't gotten that 382. We've gotten this pullback, right? So we were talking about it last week, how, hey, we came into this daily level, look to reduce the trade, you know, our position, because it was respecting this daily 107 80 level, and you can see it's been bouncing around and struggling here, right? And it's pulling back again. But this is technically, right, it's moved quite a ways in our favor. Okay. You look at 55 pip stop versus an 139 pip TP1. We're not there yet. Like I said, I have reduced, you know, the size of my position off this level, but it's still active, right? So what we're looking for is for this to continue to correct down to that TP1 level. So that one is still in play. Let's see what we have. If it continues to push up, it'll stop me out in profit, the remaining position that I have left open. Any questions on the Aussie NZD and where we are right now with that one?
No, sir.
Okay, Aussie dollar. So we're taking a look at this one. 15-minute, right? So I had it planned. So you'll see this is kind of similar with some of these Aussie pairs, right? So here's our 382. Okay. And I have it drawn up on a 15-minute. And so you can see, right? This is the 80-20 zone. We do this over and over in this group because we want everybody to realize that this is a pattern-driven market. The market does the same thing over and over again. Now, if you can consistently identify a location like our 80-20 zone, right, that we discovered quite a while ago now, it can lead to you becoming a consistently profitable trader as long as you're willing to utilize proper risk management. That's really what it comes down to. When it comes down to any type of trade idea or trading philosophy, can you manage your risk? Okay. So you can see here that we clearly have a reaction, right? That's undeniable. It's undeniable, right? Price is reacting at this level. Here was our move on the Aussie dollar from before. Okay. Here was our move on the Aussie dollar before. It's pattern driven. We came down to the 118, 127 zone. That's our 80-20 right here. Okay. Okay. Uh-oh. Here we go. Okay. So here was the previous move. Okay. So 80-20 zone. Right. So we know the TP2 just on a 15-minute chart, that was 76 pips. And then it went way beyond that. Okay. Way beyond that. Through TP2, which is the top of the 8 boundary. And then we came back and we're doing this thing all over again. Okay. That's undeniable. Okay. It's a losing argument to fight against whether or not price often reacts at this level. Okay, it just is what it is. So here we are. How do you scale from the pullback? Well, if you're using this down fib, it becomes the same thing, right? That's a great question. So we've got this initial reaction, right? So if, okay, you're in from this initial position, okay? So this is scaling in. So if I took my initial position at this 80-20 zone, I still use my same fit rules in regards to where I like to enter, right? So if I'm reversing now, and this is moving to the downside, so I'm saying, hey, in the short term, this trend is down, okay? Then when I drop this down fib, then my additional position, if my rules are, if I'm trading with the current trend, which we're saying, hey, is down, right? And this latest move, this near-term move is down, okay? So we're looking for this price action to move down and make an ABCD wave correction. So then we go back to our rules and say, well, I like to enter around a 61.8 or higher, right? Within this fib, this down fib. So my position would be here, right? So I would now add to this position around that 61.8 level, if that's your zone, right? If in your trade plan, hey, I like with the trend, I like entering at 61.8, 786s, right? Give me a higher price for a discount to sell, you know, a higher price, not for a discount, but a higher price to sell. Then I'm adding a second position here, right? Because this position is already in profit, okay? So this position is in profit, call it 25 pips. Now I'm looking to add another position, and then I'm gonna look for that to carry to TP1. So if down here, right, that's gonna be 86 pips, and then that second position, second. All right. So here, right, 86. And then my second position here, coming in at 60. That's how you can add to that trade using your fibs. That answer your question, Jeremy?
Yes.
All right, awesome. Okay, and then we move on down. Okay, and with this fib moving to the downside, if we got a 61.8 pullback, then that target on this fib is that 1.618. So you're looking at the possibility of moving to TP2 actually, right? So that's how you can scale into that trade. Any other questions on this Aussie dollar?
No.
All right, jumping in on this this CAD Swissy. while ago that's still active, right? We're still in the game here, okay? So if we go up to the daily, this continues to bounce around this level. It takes off and then it comes back and it pushes down, right? So we can't maintain the momentum right now. So it's flat. But you have it here, okay, which we put, I think this was a week ago, right? So this one is still moving sideways, still active in our zone, right? But we need a catalyst. We need to catch some bids to push it long. Okay, so that one's still sitting there. It's looking like on the 1 hour as well, right? You can see where it's just hovering on that subfib around that zone. But we've been tracking this one mainly on this 15-minute chart, trying to see if we can catch some bids. So this one is flat right now, still right at the level. We got some momentum and then it pulled back, but this one is still active and in play. Okay. Any questions on the CAD Swiss? Nobody's interested in buying.
No, sir.
Okay. All right. So let's take a look at the CAD Yen. Looking at this on the 1. Okay. This one is coming down out of the zone. Okay. This one is happening right now. So just leaving the zone, haven't had time to get it posted yet. But if you're live on the session, you're seeing this right now. We do not have a 382. We ran into daily support at 109.47. Our TP1 is just below that. So you can see how price pulled back and accelerated. Okay. We pulled back. We pushed down. Less than a 382. We broke the B boundary. We shot up in the zone. And we haven't gone all the way to that D extension. We've stalled. Okay. And now we're getting a sell-off here. Okay. Okay. So we swing trade. We don't try to get perfect entries. If a perfect entry happens and price turns over, where we set our either our sell limits or where we enter the trade, that's good. If it doesn't, right, we've got we're managing our risk. So the drawdown, we're good. It doesn't tie up our accounts because we're trading 0.5%, 1%, 2%. So this is where we are now with this swing. So it's looking like we're trying to turn over and move back to the downside. So this is an 80-20 that is in play, right? I'd like to use a wider stop. I'm busy. Don't have time to be around my computer trying to time the market. But, if you do have time, some people like to put it right over that high, and a lot of times people, they want that additional confirmation with the trend line break. That is perfectly fine. Okay, to do it that way. Okay, so if we're dividing our risk by our stop loss, if we move that stop loss tighter, that means that we're able to trade at a higher lot size, right? That 1% represents a lot more in regards to what lot size I can trade at because I'm shrinking down my stop loss. Okay, everybody follow me on that? Yes, no?
Yes.
Okay. Awesome, right? That is a rule to keep you safe. Okay. That is a rule to keep you safe. People ask us that often. How do you calculate your risk off of these setups? Whether it's a C to D move, an 80-20 type of move, you divide your risk by your stop loss. That's going to tell you your lot size. Okay. All right. So there we are. We're turning over. Let's see if we can maintain that momentum. Okay, on this move. Any questions on the CAD yet?
No.
Nope. All right. Take a look at the Swiss yen. Okay. Taking a look at it from this 4-hour chart. We are right in the zone. Okay. We're pushing up. We do not have a 382 correction off the B boundary. We came up just shy. okay, of that 382. And we broke that B boundary. Okay. So now, hey, is price going to stall out in our 80-20 zone? This is a high probability trade setup for us. Does it stall out? Do we get to return back into the boundary? Do we get to return to move back down? Okay. If we do, right, we push back down. You're looking at as a 600 pip move. Okay. If we move here, right, large stop loss. Okay. All right. Any questions on the switch in?
No.
All right. These are large moves, right? And you may say, well, if I'm trading, if I'm dividing my risk by my stop loss, that's a huge move, right? It is, right? So at minimum, you're trading it at 10 cents, right? Depending on this is all depending on the size of the account, right? I'm speaking in terms of if somebody has a small account, right? You still, hey, okay, I'm gonna trade this one at 10 cents, or I don't trade it at all, or I wait, right, to see if I can get a high to form in the zone, and then I run a trend line break and look at a trend line break. So if I get a high to form and this becomes a level of resistance, okay, which we already have that really. So if I put this in because we've got a swing high, boom, that's resistance. So now I've got a new high in the zone. Okay. Keep it super simple. Okay. So now I've got a 4-hour high. Well, now I'm looking at like, okay, if I, let me zoom out here. Trend lines. And we're going to run it through our highest high. Okay. Just like that. Check it out. So, okay. And now we run another inner trend line there, but we'll take it from here. Okay. If it get priced to push down and break trend line, then hey, you know what? I'll run my stop above this high. Okay. And if we get that breaking and close, then I'll take it. Some people may say, hey, I'd like for some additional confirmation. So in addition to the trend line break, I'll wait for a low and then I'll wait for a pullback, because then that starts to look similar to some of the yen pairs that we've seen already, right? So then I'll wait for a pullback to a key level, then I'll look to get short. So, okay, like that. So then price will pull back, maybe we get a test of the trend line, and then I'll look to get short from there. My stop's above the high. Everybody follow me on that? Yes, no?
Yes.
Okay. It's a big move, so you've got time. Okay. Or you may place a small position, limit in, right? 4%, 0.5%, stick your toes in the water. And then once it pushes down, if we get a trend line break and pull back, then kind of what we just covered with Jeremy and the awesome question that he had, when do you add in or scale to a position? Now, maybe this is the time that I scale into that position, right? And then I continue to add positions as price moves in my direction to that 382, right? That's how you play a big move like that. All right. Okay. You can track that from the lower time frames too. 15 minute, 5 minute. Okay. So if we get that reversal and the trend direction is down, we could track the smaller ABCD waves on a lower time frame. Okay. But that's our reversal zone right there. We're in the 80-20 zone. We're looking to see if we can get price to reverse. Questions on the switch in?
Nope.
No, sir.
All right. Okay. So that's that. Check in on this Euro JPY. It is pushing up. So if we look here at this 4 hour, right, it is beyond our zone now. But look, you see how this is a great example. You see how it's continuing to push long, right? It's pushing long. We're starting to stall a bit. Okay, this is a big play, but you see how we don't have that trend line break? See how it just kept moving up? So when you're using those additional confirmations, right, just continue to let it ride, okay? And so we'll draw that just like that. We've got a nice inner trend line there, and that just tells you, right, the speed and momentum of the market. Look how the angle changed. See how steep the angle is, right? Buyers are pushing that price up. So the question is, will it stall out prior to that stop? Will it give us the break of the trend line that we need so that we can play this correction, right? Now, some of you have been long, right? The yens, if you've been riding a buy trade on this and you're going with the trend, right? Then this is not your move. You just continue to ride it out, right? If you've been in the euro yen long for a while, you're just gonna let it keep rolling, right? You're moving your stops, in the profit, so if we do get this major correction, you're good, right? But this is just continuing to roll. Here is our last ABCD wave here, right? So off this daily level that it tapped right at this 50%, look at that, okay? That was over 637 pips. So when we draw these moves up ahead of time, to forecast what price may do, when you're using these fibs, you don't have to go far to find evidence that it does that. It does move 400, 500 pips, in one move to the upside in one fib sequence, right? So it's not like, we're not telling you the truth or it doesn't happen often. All you have to do is scroll back through your previous fibs, and it'll show you that this is how the market is moving. Right? If you can look and track the waves, right? The market moves in waves. This moves sideways a bit, but when a trend gets going, you can see where price is just moving in ABCD waves, right? Sometimes larger, sometimes smaller, but the market moves in waves, right? You got choppy conditions here, right? Where price is moving sideways, it's a lot cleaner from the higher time frames. But you can see how this thing is moving up and down, ABCD waves, right? This is the most recent, okay, moving through. Okay? It's been a choppy pair with these yens, but you can see how this is moving up, right? And this is what I mean, right? It's been choppy, but your larger waves, you can see clearly how that's been moving, right? This is an ABCD wave, okay? Look. Right. So while it was choppy on the smaller waves on the lower time frames, it's clean on your higher time frames. Okay. A, B, C, D, A, B, C, D. Right. So there we are. Any questions on the euro yen?
Nope.
Euro USD. Just want to take a quick look in on that. Right. And it just shows you how how patience pays, right? We were sitting in this Euro USD forever, okay? But it never took out our stop, right? It never took out our stop. So if you were using that wide stop, never took you out. If you were waiting on the trend line break, it didn't get going in that upward direction until it broke trend line. Okay? So whether you were in off of a buy limit, in the 80-20 zone, it didn't take out your stop. If we were using the additional confirmation, right, and the trend line break, putting your your stop in below the low prior to the trend line break, it's the same position, right? The same position. With the trend line break, you didn't have the drawdown, right, that you had with this buy limit, but it still played out the same. So it all comes down to your trade plan and your trade psychology, but it's still primitive. It still only moves up, down, and sideways, the market. So regardless of how you enter a trade or what you need to have in place, whether it's a cloud break or a trend line break or a moving average crossover, stochastic alignment, regardless of whatever you would have used to confirm this trade, it still came down to risk management, okay? Having a proper risk management so that you can stay in the game and getting your direction right. That's it. So whether you're using a MACD, whatever type of indicator you're using, this market still moves up, down, and sideways. That's it. Right? So whether you needed a trend line break and 6 retests, and 9 different confirmations, it still came down to proper risk management and ultimately getting an overall direction. You can't control all of this movement, the sideways movement, the back and forth, the choppiness, but at the end of the day, we had a direction right and our risk management was stellar to the point where we could stay in the trade long enough for it to move in our direction. Everybody follow me on that? Yes, no? I want to make sure that I'm clear.
Yes.
Sometimes we overcomplicate things, or we might see this bright, shiny new object out there that can predict things at 98%, 99.9%. The market moves up, down, and sideways. So you have to ask yourself, really, does all of that other stuff really matter? Okay. So that's the Euro USD came through at TP2, 270 pips off that 80-20 zone. Okay. That's the Euro USD. I'm looking at this. I want to take a look at this pound CAD setup. Because I don't have, right? I'm thinking about what's going on with that oil price. Let me clear this analytics off of here. See how this has been moving up. Okay, it's moving back and forth. We're having a bullish day. We don't have a daily stochastic alignment. But this here is in a pretty decent zone, right? We can see how this has clearly been making ABCD waves. We've moved down in a pretty good zone. You see how we're holding up right around this 50% level and moving sideways. Our 4-hour stochastic alignment is there. I'm thinking long on this pound CAD. Okay, I'm thinking long. It just seems to be lining up. Okay, got a zone here. This is becoming future support in this area. I'm watching this one closely. I want to see if I can start to get a break and get ABCD waves to the upside on this one, on the pound CAD. All right. Ryan, what are your thoughts on this one?
Yeah, I was looking at this last night, bro. And I'm in agreement with you on that.
Yeah, yeah. That's what I'm thinking, right? So keep an eye on this one. This one's looking like it's lining up for a long. This pound cat could be tricky though. So that's what I'm looking for. See if we can get a break, right? Some people may be in on it already, but this is pushing up. Maybe we get and I may be being too conservative on this. Maybe we get a break and a pullback, right, to this level here. Potential for a potential long. Right? It may be a good play right now as it's currently breaking that trend line, but I might wait on it. Okay. Benit, you were in it last night. This pound cat, you were in it. You were in it long. You're in it long.
Yes, sir.
I didn't hear you.
Yes, I was.
Oh, you were? Okay. All right. So yeah, that one, it's looking at the oil price and how those inventories came in, those US inventories came in, that may continue to weaken oil. So yeah, that one could be a decent one. Any questions on that? This is coming. I mean, even on my 30, this is breaking pretty good right now. Trend line break, got a nice bullish candlestick. We're taking out highs, right? We got another one right here coming in. So if I get a pullback on that one, I might go ahead and take a shot on it. It's looking pretty good. That's the 30-minute. This is the 15. So if you're not in on that, we got some time, right? Do we crown? Right? Do we get a crown on this? All right, it's taking out the highs. Do we eventually get it to pull back? We might not. That one might be off and running on us. May have to wait for the next fib, but we'll see. All right, that's the pound cat. Any questions?
No.
No, sir.
Ready? Let's move to, speaking of that, let's go down to this NZD CAD. Set up. Where did I have that on? It's the old 80-20 play. That thing is still running. Oh, here. That's pretty much. So I'm trying to get it to on this NZD CAD play here on the 1 hour. Okay. We've gotten a good move out of this 80-20 zone. So I'm trying to see if it wants to continue down to that TP1. So that's just a quick update on that NZD CAD move. So I missed it. Wasn't able to manually close that out. That got close to that TP1 and then it pulled back. So we're seeing that, hey, can we hold at this 82.13 and make a move back down, right? So some people may be out of that NZD CAD right now in that short move correction to the downside. If you played that, but hopefully we can get that TP1. That really got close enough where I should have took profit on that, but wasn't aware, wasn't paying attention. So hopefully we can get it to come back down to that TP1. Any questions on that NZD CAD?
No.
NZD Swissy. Just want to go over this one. This one just to touch base. This one here got close to TP2, right? So if you're still riding that, got TP1 on it. But you can see here this it's looking like it's trying to turn back over and push down to that TP2. So it got close, right? So a couple of these got close to some of their targets. The other one was a TP1 that got close to a TP2. So we got one target on this one, a pullback, and we'll see. It looks like it's going to go ahead and continue down. So if you're in that position, keep an eye on it again, right? That's another 80-20. Okay. Seeing is believing. Any questions on the NZD source?
No.
All right. NZD JPY. All right. So those of you who've been holding this one, okay, we are starting to move back down. Right. So you now have, right? You see how that can push up? But if your risk management, using that by stop loss, right? 1%, 2%, it is what it is. We don't worry about that drawdown. Here comes the swing, right? So look at the drawdown. Did we hit the stop? No. Now look at how this trade is pulling back. Okay. Right. And that's just good price action there. Look at the pull back to your structure there in your zone, right? So Jeremy, this is another type play, right? Where you can have an opportunity to add, you know, to a position. This one pulled right back to entry, but now that you have this trend line break, right? Hey, do I make the decision to add, you know, to it? Right. So that just comes down to your trade management. So maybe not. Hey, maybe I don't want to add to a pullback right to my original entry. But now that I've broken the trend line and I'm moving to the downside, do I want to make an additional play on that? So those are just some of the things that you think about when you're trading. You're thinking about adding to position or reducing positions. You know, it's just a skill set that you develop over time. Okay. So again, you're welcome. So again, this is right. Another 80-20. Okay. Okay. All right. So we take this one, you know, for example. Okay. If I've got a $5,000 account, you know, and I'm risking 1%, right? Somebody tell me, what am I trading with here? What's my risk, right? In terms of dollars, $5,000 at 1%. What is that? It's $50, right? That's $50. Now, at $50, I've got what is that? Like a 50 pip stop, right? So if I've got a 50 pip stop on that, okay, 52 pip stop, call it 50 pip stop. What am I trading at? What's my lot size? 0.1, right? 1 mini lot. Thank you, Benita. All right, $1, right? So if this hits my target, okay, let's make 95 bucks, right? And then it just matters if I add to that position or not. Simple. Simple. Okay. If I've got a small account and I'm trading at 10 cents, right? I'm gonna make $9.50. But you have to think of everything in terms of pips and percentage, right? What's my return? What's my gain on that? If I have, you know, a $1,000 account, a $500 account that I'm trying to trade and I'm trying to compound and grow, right? That's a good return. You have to be patient. You have to give yourself time to develop and learn this thing, right? But that's a beautiful break. So here you had a beautiful pull back to structure. Beautiful trend line break off the initial move if you run it through the highs. Okay. Beautiful pullback to that level, and now we're moving down. Any questions on the NZDJPY?
Man,
Nope.
I was trading this one off the one and got stopped
Okay.
out by like 2 pips.
Oh, you did?
Yeah,
Oh, yeah.
right there.
Yeah, man. That happens, eh? It's crazy, huh?
Yeah,
So hit that stop and then it came down, then it moved down. Man, that's how it goes sometimes. This one
yeah,
has been a wild one, right? Because this one didn't make this one moved sideways. We didn't get back to TP1. We didn't get it. And now you're getting that correction. I wouldn't be surprised if that just continued to make a move all the way down. Yeah. So that gave a decent move, right, to the downside, and then it reversed out. It was a bit crazy. All right, so y'all win them all. So it's all good. It's all good. So with your 15-minute one came through pretty good. All right, so that's that. That was literally like 1 or 2 pips.
yeah, man, crazy.
Yep. All right. NZD USD. All right. 30-minute closing in. Bang. So the week got a little jacked up in the beginning with the data that came out. Markets moving all over the place. But things come right back in the flow. You just be patient. Okay. You just be patient. Make the plays, right? So NZD USD 30-minute chart moving down to TP1. Any questions on that? Ten pips above the A. That's why I always. Oh yeah. Always plus 10 pips above the A. That makes sense, Jeremy. It's a good little nugget there. Appreciate that. All right. That's that. So covered a lot. Opportunities out there looming. Let me take a look at the S&P. See what we've got going on there, right? We know we've been running bullish. Okay, for the most part, got that trend line break. Okay, on the S&P, we're at this 45.30 level though. Okay, we're starting to put in a high there. Right? Our daily stochastic is overbought. So it's been a beautiful move off of 44,093 daily support. You had a 50% there giving us some decent confluence there. And now we've broken that outer trend line. So of course we know that this market moves in waves, right? That's the beauty of being in this group and understanding how we trade the fibs is that we know things don't go up forever. So the question with this S&P is now, is it time for a correction? It's been running for quite some time. Do we come back to retest 43.83? Past resistance becoming future support. This would be a beautiful opportunity, right? I'm not looking to buy now, right? None of that FOMO stuff. Okay. Don't buy and what could be possibly the top of this move. So we look forward to do a few things, right? A couple things, actually. Is it going to reverse off this B boundary and give us a low price? We'll take a look at the climate, at the point in which it reaches that level of support, if that's what it wants to do. Then we'll look for evidence that is ready to get back long. Or we understand that, hey, price doesn't always make a deep retracement right away. Sometimes we get price to correct just a little bit. Buyers come in and push the price up into our 80-20 zone. And then we look to see if it wants to make a move back down. And then sometimes, right, just like on that 1 hour chart that we just saw with the New Zealand Japanese yen pair. Sometimes it just runs, right? Sometimes the buyers, are in control, and it's just going to run to that D extension. It is what it is. But it's only the way we frame the market out, it's only a few different scenarios. Why? Because the market moves up, down, and sideways. Can't say that enough, right? Let's take a look at the Dow, right? The US 30. Okay. Look. Almost identical to the S&P. Deeper correction, right? Deeper correction. Okay. But you can see where broke trend line. We're moving. Right? Boom. It's almost exactly the same. Okay. The S&P. 1, 2, 3 times at this level, there's 34,946. So we roll down through the time frames and say, hey, at some point, do we catch a low price? For example, this is where, see how the market just accelerated? How it retraced 23% and then it just took off, right? Didn't even stall in our zone, just kept it moving, okay? So now the question becomes, like, for example, on this 4 hour chart, can we get a correction? Okay. Can we get this correction back down? And from there, do we stay long? Same stuff over and over again, right? Here we are, it's a 30-minute. Look at what's going on. Okay. Look at what's going on. We can pull these out now. That's old stuff. Yeah. That's your US 30. Let's take a look at the German 30 this morning, and we can see where this is moving bullish. Okay. Y'all kind of move in sync, right? Easy setups. Okay. You've seen the S&P. Okay. US 30. Look at it from the daily perspective. They all pretty much did the same thing, right? That's a little nugget there. Okay, there's no mystery. There's no mystery. Okay, so this is kind of the same. It's the same situation, right? Where we're moving up. We're looking for that wave. Okay, we're looking for that wave. Look at how it was downtrending. This is that correction from the higher time frame. Okay. And when it's time for price to reverse, it reverses. You see how we didn't get to that D extension? Higher time frames control the lower time frames. They made a deep correction on that daily, and we caught bids. Okay, now here we are. So let me pull this out. Let's just look at this from one direction. Okay. We're in our 80-20 zone here. German 30. Do we stall out? Do we start to get that sideways push? You can see we tried to start moving sideways. They're having their fight. Bulls have one more push in them. Okay. So we're in that zone there on the 4. And then this is what we look like on the 1. Okay. So we're getting to some pretty high levels. When do we see that correction? And do we want to trade that correction, or do we want to wait for a low price and just roll with the overall prevailing trend at this moment in time? Okay. This is another one where you deploy that trend line, and if you get that break, then you might entertain taking that, right? So here, on year 1, if we do get a correction, this is a level that we want to be aware of. Okay. And then, so do we, right, either push up to that extension? That's fine, right? Because then the market just resets itself. Or do we turn over? Right? Benny, that's not going to happen. We just saw it on Paris as we moved through the charts. We just saw it. Right? Do we crown there, right? Do we get a crown? That happens at that point, right? Just thinking ahead. So that's the German 30. Let's take a look at the NAS, see what we've got going on there. Right. Bullish momentum. Look at the swing. Right. Look at the swing. Right. That's a weekly level, 15,929 that we need to be concerned about. Look at this push and how things are moving. Pushed all the way up. I need to remark this chart up. I haven't been on this one much lately. But look at the swing. So we could take these out. All of this now, because that was a correction that was occurring before off the highs. Right, we can see that move down, how it's making lower lows and lower highs. And now we've got that bounce. So we know we've got a daily level of support. And right here. Okay. Link that down. And just gonna put the smart fibs in now. I'm gonna scan it. Just run it off the lows. Oh, I see what happened there. Because we don't have anything yet. Right? Crazy move. Look how it took out that A. Then we move to the upside. So we need to move down to the lower time frames. Here we go. Right. That's where we are moving up. Here's the latest correction. Okay, on this NASDAQ 4-hour. So I see why it wasn't showing up on a higher time frame. We don't have a swing high yet. Okay. See if that wants to carry down into our buy zone on the NASDAQ. What are we looking like on the one? Well, it's an 80-20. I missed that one. Anybody put in a play for that? Man, that's clean. Reach daily pin bar. Mm-hmm. Right on that. Yes, sir. I see that, Reese. Good eye. Good eye. And you see what that pin bar, what it led to, right? Pretty much moving down. Man, oh goodness. So it's an 80-20 there. Doesn't matter the asset class. Yeah, I should have been paying better attention to this. Right. So we're moving down. Can we get that 382 and ultimately back into our buy zone? Let's see how it plays out. That's already a decent move. Right. Yeah, I know. I did too. So that's the NASDAQ. And then let's take a look at the Nikkei. I haven't looked at that in a long time. Wow. So you see how it reacted out of that 80-20 zone, and now it's pushing right back into that range, which that's what it was before. That's why I had that rectangle drawn. So we really can just extend this straight across because it came right back up in that range. But shorter term move, right? You know, shorter term leg is to the upside. So what I'll do is let's see what we've got here. All types of madness. Let's go down to the 1. Scan that, right? So that's where we are. So let's see if we can get a correction to the downside and then maybe look to get long, right? We'll continue to watch the sentiment indexes. All right. So that's it. Ryan, anything to add before we close out, sir?
Phenomenal session, bro. No, nothing to add, man. The opportunity is there. Got to be patient, manage our risk, and pull the trigger when the rules are met. That's it, bro.
All right. Well, hey, I appreciate everybody's time this morning. Any new setups that we'll find, we'll do our very best to make sure that we get it posted. Anything that you guys find, right? Use the you're welcome, Jeremy. Use the group, right? Post what you're finding. All right, and then we'll move on from there.
Take
Yep.
that.
All right. So hey, have a great day, everybody. We'll see you tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session.